a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
In the wake of two hurricanes, home building ETFs come into focus now, and our ETF research director, Nina Mishra, is going to fill us in more about that. I guess after these natural disasters, there is always that rebuilding period that some will benefit by.
Yeah, there has been a lot of damage in those areas, and substantial rebuilding work will be required. And that is why there has been a lot of interest, investor interest on these building and construction stocks and ETFs. And today I thought I'll focus on 3 ETFs in this area. Now, these ETFs have been doing well this year because housing market has been strong due to improving jobs market, rising wages, and still very low interest rates. You know, there is a lot of skepticism about whether President Trump will be able to implement his agenda and when. But whenever an infrastructure package that has been planned, is being planned, whenever that is announced, then this sector, especially the construction stocks, they will benefit a lot from that package. And as I mentioned, there are 3 ETFs focused in this space, and they may sound familiar, but actually they are very, very different from one another. So I wanted to discuss what investors need to know about these ETFs, especially because there is increased focus on these ETFs.
Are these 3 new, or have they been around for a while?
They have been around for quite some time.
Okay.
All 3 of
them.
them.
So we're just going to show the differences here and kind of compare and contrast. And so the first one is the iShares Dow Jones U.S. Home Construction ETF.
Yeah, the ticker is ITB. It's the largest and most popular ETF in the space, and about 2/3 of its portfolio is allocated to home builders. Home builders like D.R. Horton, Lennar, and NVR, they are the top 3 holdings, and they together account for almost 1/3 of the portfolio. And some of these home builders have done really well this year, like NVR is up about 68% this year. So that is why this ETF has been a really good performer this year. It has an expense ratio of 44 basis points.
All right, then there's the Spyder SMP Home Builders ETF.
Yes, so it is different, first of all, because it is an equal weighted ETF. So almost all holdings in the portfolio get equal weights. So home builder like D.R. Horton, or home remodeling stock like Home Depot, they have almost equal weights in the portfolio. It has about 1/3 allocation to home building and 1/3 to building products companies. This is the cheapest in the space with 35 basis points expense ratio. Being equal weighted, it largely reduces the single stock risk.
All right, and then finally the PowerShares Dynamic Building and Construction Portfolio.
So it has a ticker of PKB. It's a smart beta ETF. It evaluates stocks on a number of investment merit criteria like price momentum, earnings momentum, value, quality, management action, etc. It has about 27% exposure to home building, 14% exposure to construction and engineering, and 13% exposure to construction materials companies. It is the most expensive in the space because of its enhanced indexing. It charges an expense ratio of 63 basis points. Companies like Jacobs Engineering, Owens Corning, and Home Depot are among the top holdings. Now, this ETF had done really well after the election, and again in anticipation of that big infrastructure package, because it holds a lot of companies which are involved in large-scale infrastructure, construction projects. And again, whenever President's infrastructure package is announced, this ETF could be a big beneficiary, though it has not done so good this year, because we know all the most of the Trump trades faded this year as investors, worries over political discord in Washington increased.
So how do these stack up against the S&P?
So on this, on this slide, I have the comparative performance of the three ETFs that we discussed today with the broader market ETF, S&P 500 ETF. So as I had mentioned earlier, so because of excellent performance by some of the home builders. The first one, the product by iShares, ITB, has been an excellent performer this year with almost 27% return. The second one, the equal weighted Spyder product, has also done pretty well, about 14–15% return this year. And as I mentioned, the third one, PKB, the one which focuses on building and construction stocks more, is about up about a little more than 12% this, that is up about 6.5% this year, whereas the broader market ETF, the S&P 500 ETF, is up a little more than 12%.
And because the rebuilding hasn't really set in yet down in those southern regions,
yes,
these probably have more room to run
in the coming months as rebuilding and construction picks up, because I think a lot of construction will be required in those areas. Looking at the pictures, images of those, damage caused by those two hurricanes.
Sure. Do you own either of these?
I don't.
All right. Check out more ETF information on our website, Zacks.com. All you need to do is go to the homepage, use the Funds tab in the top toolbar, and it will direct you right to that section of our site. With Nina, I'm Terry Ruffalo.